Okay. All right. Good morning, everyone. Happy Monday. As always, we are going to do a broad market outlook. We'll go over a couple of top ideas, which for this week, obviously, is going to be very few. And then any member ideas we'll go over. So getting things started, again, energy has been pretty strong, still kind of trending higher. But the overall theme here is that the fast kind of uptrend that we saw for the past 2 months is starting to change into more of like a consolidation where the names are setting up, but we can kind of see how we just see this flag forming where it's still strong, but it's just going to start to consolidate. Utilities, again, when the market's weak, people the flight to safety is the safest sector or the most boring sector, and that's utilities. So it's not too surprising that utilities are still holding up very nicely here compared to the other sectors that pretty much just look like a disaster. Healthcare is kind of setting up here. Again, we saw this little shakeout down here of this major support area. I really thought this would have rolled over much harder, but little shakeout, it's kind of back in this range. And this is one where, again, most of us are just buying weekly anyway, so it doesn't really matter. But from an entry standpoint, if you were trying to swing trade the sectors, buying up through 240 versus this 230, 228 area, and then looking to take profits into the this range, that there's like a little trade kind of setting up there. And then moving on to this long list of weak sectors, which is basically everything. The S&P continues to kind of have these H patterns. We finally ticked technically into a bear market. Bear market being we were down more than 20%. We were down about 22% on Friday and closed a little bit above that. So broadly, this is oftentimes when people want to run away from the market. They want to cash out when when you look back at the last bear market we had, the market dropped 33% and rocketed right back higher. So we do need these breakdowns to have those next leg, the next legs higher. You can see here, like as painful as this period of time was, that month or so, we bounced back even stronger the time before that, 2 months, 3 months of chop. And again, we bounced back much stronger. So again, this current pullback probably will be a little bit more exaggerated than these, just given the percentage run up that it's gone. Where this run up, we fully retraced that entire move. A lot of these like bigger moves that we've had in the past, we have completely retraced them, and that's what gives us kind of the momentum to push us higher. As much as we want this trend to continue in forever, it wouldn't be a stock market if that's all the market that was just went up every single day. So as painful as it is in the short term, and I know it can be very confusing or in the day to day, I think sometimes when you can step back and like look at the weekly or look at the monthly, and if this is what you're seeing, red week, 2 months of just the market pulling back, you don't need to be the hero trying to buy things down here, because even I made this big mistake in the pandemic where I avoided a lot of this, drop, where I got sucked out of a lot of my stuff under this break, but I got back into the market too quickly right here. Let me just change this. I sold a lot of my stuff that I had getting stopped out under that support area, but I prematurely reinvested way too much thinking that this perfect area of support was going to hold. So I had to sit through this much faster, dramatic drop, and just got me, I got out of all the positions, but I got kind of trapped in a lot of them just too prematurely. And I feel like right now, the members who are trading actively, I think for the most part, they're trying to find things that just aren't there right now. And until we can once we get 1 week, we're never going to buy the bottom, but if this was the bottom and we get an inside week here and they get inside weekend up, it's so much easier to like let that happen and then buy on these 3-4 week kind of run-ups than trying to buy here is like what it seems like most people are trying to do. And it's so much easier just to wait for this, like this buy right here. And if that means kind of sitting on the sidelines for a week or two or another month, it's so much easier to just not get chopped up in this. And again, looking at every sector, REITs breaking down, industrials in a breakdown stage, consumer discretionary is aging over and couldn't look worse with increasing volume. Tech breaking down again, all on increasing volume. And these are just not good signs. Let's see, financials, same thing, H&E over, increasing volume. Mid caps, it's like a broken record. NASDAQ, small caps, increasing volume, breaking down H&E over. It's all like these just, materials, honestly, still actually looking very good, flagging up here. This is, again, like what we saw with energy. Energy was very strong earlier this year, was kind of like in this area, and now we're starting to see this consolidation. Same with energy. So I'm actually going to move materials out of here because they actually look pretty good. But a lot of the same things. Consumer staples, it was very strong. You saw this topping pattern. Now it's starting to break down. Pretty much in a void. Telecom, reversed more than 50% of this move. So this should be a very obvious sign of what could come. I'm not saying that the market's going to retrace the entire post-pandemic run-up, but the telecom sector is showing us that it was able to run 100% and it was able to pull back more than half of that so far, and very orderly. Biotech, same thing as telecom, fully reversed that move, and the large caps aging over. So all around, broadly, things do not look very good. So from an active standpoint, the more you can kind of hang out in cash. Again, you do want to scan for setups because there are some things out there, but you want to be very light. You want to have your 1 or 2 top ideas for the week. You shouldn't be coming into today with no ideas and trying to find something, because it's just going to waste more of your time. This is a great time if you have another business, anything else that can make you money. Put your focus there until we get an inside week or an inside weekend up in the broad market, and then we can start to find those easier opportunities. And right now it's just swimming upstream. So again, a couple quick little lessons learned from some member ideas. This FNKO, I forget who mentioned it last week, but this was kind of a perfect example of why at post earnings you don't want to like chase the earnings high. And this was like a perfect example. It was a 10-20% loss very quickly. Having your Hershey's could not
man,
more beautiful. But
again, a great short.
Yeah, because even though, again, technically it didn't trigger, which is fine. But even if it did trigger, we could not have had an easier exit and would have avoided this disaster. Amazing chart. Again, a lot of charts like this.
I blame Mo, by the way. He had some meeting with Hershey's and he just destroyed it. I blame Mo.
But I think you were looking at BNY. BNY still, again, flagging very nicely up here, still holding up. And a couple of the member ideas from the last few weeks, this AMD, definitely basing here under 100. I think this is like, even though, again, this, doesn't look the best as it kind of faded this move this week, but eventually up through 100, this still looks very healthy up through 100, where eventually you get that move to, into the 200 day, into 120, and potentially, up to 160. Right now, it's hard to think or believe that with the market, but this is a nice little base that's forming, and it's a very defined psychological level, but it just will need some time. This is not tomorrow or today, I'm going to buy 100, but this can, base out here for a few more months, up through 100 looks pretty good.
Yeah, I think just to add on to that, I think earnings coming up in like 2 months will be a good defining factor of that AMD. So that's kind of like, I'm as an active trader, I am sort of kind of trading this range. I've traded it to the upside and the downside over the last couple of weeks, and it's been beneficial for me. But yeah, I'm definitely waiting for that continuation of that sideways action, and then maybe a post earnings move, depending on how those numbers come out.
And that's, again, if you can find a name that you have some experience with, like this is a big range, even just this base.
Yeah, exactly.
100, that's, you're talking.
That's why, and it's kind of like that
range. So that's where a lot of people, there's like two sides of it, where can be a time to stay away from the market and not actively trade. But if you can stomach the volatility and kind of buy the ugly and sell the pretty, like for this, it's pulling into support, looks horrible. You're buying up off of support, selling into resistance when it looks amazing. Those are big ranges where it might take, in a slower market, months to get 20% out of AMD, where when things are much more volatile, it could be days where you can get that. But you have to understand both sides of the coin, where you're not going to risk 1% to make 20. You're probably going to risk 5 to 8% to make 20. So it is a little bit relative. Again, the CVX, just, we can see the same thing, just it flagging out here. Again, probably going to need a little bit of time. This ALB up through 239, again, still setting up pretty nicely, just not, giving any thoughts of what the market's doing, just doing its own thing. It's good to see. This FNG probably is going to roll over on this 120, but those are just a couple of names that I kept on here from that members brought up that just looked okay. So that's my little take on things. And if there's any ideas you want to go over now, Heaven, we can.
Yeah, absolutely. So for me, like I just kind of mentioned, I'm kind of on the like active day trading mindset. So I'm just kind of focusing on like AMD and Apple is kind of the stuff that I'm just studying every single day, even if I'm not trading it necessarily. But just kind of watching them because I know that they move a lot with the overall market, or sometimes I'm just trading the S&P and the NASDAQ. But just continuing to build my relative strength list. Something that I noticed last week, I had built, I even posted a lot of relative strength names, and a lot of them kind of got destroyed on Thursday, Friday. And that just kind of reminds me that just because something has relative strength doesn't mean it's time to buy right now. You still have to have the wind under your sails and have the overall market still pushing them. So patience is really key. Even if you see a relatively strong name, doesn't mean it's going to go right now, but it's something to, keep on the watch list for later. That being said, we do have a few member ideas. So Kush has got a couple. He was looking at EQT through 4350 area, sort of like a low cheat level. EQT.
EQT?
Yeah, definitely not ultra pro short.
Yeah, I was like, what?
So yeah, high and tight flag here. I mean, it's not all-time highs, but it's 52-week highs. Kind of just putting in higher lows. I really like this one. I think it looks solid. As it gets tighter, you can see the volume starting to dry up as well. So that volatility is starting to contract. Really nice one, I think. 4350, 44 area looks solid. Next one he's looking at is NFE through 44, which I believe is also on the shakedown. So Kush is looking at the right names. Similar setup here.
A lot of energy. So far, both energy names, which again,
that's good. Yeah. And then the other one was LNG to the downside. So through that, like 127.50, 128 area, as it's starting to kind of form that stage 3 consolidation here.
So he wants a short. I mean, I can definitely see it. So he short that through 127 versus this 133. If he's wrong, he gets pushed out. But yeah, I mean, it's funny though, because like he wants to buy 2 energy names, but he wants to short an energy name, and they're all.
That's it could be a really good support, and that's why I'd love to see this ideally kind of consolidate here and really see if it can, if it fails to break back above the moving averages, which are kind of holding it as resistance right now. So that's a good one to watch. Yeah. Christopher's got a few. He's looking at XEL through 76.
Oh, really quick. So even this LNG kind of before was kind of looking to buy the ugly, sell sell it pretty. This LNG is a good example of that, where even if you want to short this 127, and from how it looks, I'm with him. It probably does break this 127, but if it does, and say it goes down to like 123, and that's as far as it really can go, and it does start to turn back up, that's where. And this is more like the day trading. Yeah. Much more active stuff. Like this is not, I'm not doing this. I'm not wasting that. But like if he was to short it, say it goes down to 122, can't really break. And that's where you're not going to cover that perfectly and get long. But if that's as far as it can go and it starts to turn back up, then you find a little, some buy on the way back up here. And that's like you're out. And then you can, now you're looking at it to, sell it back into 150. So that's kind of, this is just way more of the active stuff that I'm not really doing. But this was just an idea that kind of fell in line with what we were talking about, but we can move on with the next idea.
Yeah. Christopher's got a few. He's looking at XEL through 76. Another energy name.
This actually looks really good.
Especially on the weekly, you can see that.
This is a utilities name. We talked before. Utilities have been, of all the sectors, other than materials, obviously looking the best. And this XEL, was it?
Yep.
Yeah, this is retesting its prior all-time high. Well, already retested its prior all-time high. This one people chase. This is when everyone who was kind of bag holding this whole time wants to sell at the perfect price, creating resistance. And now this is slowly when this whole crowd of people that have been in this name for a year or two or even longer are saying to themselves, I've been in this name. I can't wait to get out. The stock has never traded above 75. it's not going to go above that. Just like if you own a stock and you're underwater in it, it gets back to your price. Even though the stock will probably go higher in your head, it can't go above your price for whatever reason, purely just logical. So that's what we're seeing here. And now as this crowd starts to slowly get rid of their stock, the more active traders like Eric and Heaven and myself and everyone else, we can start to see this setup, and eventually we can buy up through 75 versus 72 on very tight risk with a lot of, with so much more probably on our side that above this 75, it goes higher. So this actually, so far, this is definitely, I think, the best idea.
Yeah, in a strong market, this is a boat loader. Like this, I would load the boat on a chart like this. Obviously, it's a utilities name, so I have a little more bias to be a little bit lighter, just because I know it's a slower mover, more of like a grinder than anything else. But like this is like the text, my favorite type of setups. When it comes to like when tech names set up like this, it's beautiful.
Yeah, even if the market like catches a bid, it's like this. If the market does get strong, this name already looks great. So it's like, this is probably going to be one of the first ones that's going to rip compared to the name like Shopify that's down 60-70%. The market could catch a bid and it still has so much damage to repair that it's not going to get the same kind of follow through on tight risk. Name like this if they're high. So.
Yeah. Next one, he's got EXC through 48.
EXC.
C is in cat.
Oh.
Another utilities.
Another utility, all right.
Yeah. I mean, I definitely like the other chart more, but I could see this one for like a quicker trade than more of a swing trade, just sort of breaking this descending trend line through that 48 area. Makes sense. It's holding above the moving averages, which is always good. Low risk trade, risking $2, 5%.
Yeah.
Nice setup. Next one is CNQ. Yeah.
Well, name from Canada. Let's see. Yeah, definitely see what he's looking at here. I still like that XEL the most, but definitely this little tight kind of wedge forming. Definitely see what he's looking at. But this is kind of a trade just to play towards the retest. It's like this is that's going to be your trade. Wherever you're buying into here.
Yeah, 61 versus that pivot 60. I wouldn't give it to 56. I'd give it to that pivot at 60 from Thursday's low up to 69 or 70. It's a solid trade through 4-1, 3-1 trade. Next one is this ED through 96.5.
Let's see. Old comments. So again, before with that EXL example, XEL, we had, again, talk about this all-time high, retest, and then, eventually this pattern starts to break as this crowd starts to leave the name. And again, not the crate. And this is, I think, even like EXL, we often get very hyperly focused on the name right here on the initial break. And then if it fails it, we often kind of forget about it. But these are often those like sneaky buybacks where you find that same entry. You have
re-entry through that same level.
You have it versus whatever that prior pivot was. And you do look to kick some into this retest, but you really want to think higher than that. So it's like, okay, you can buy some, you kind of have 1-to-1 here, like you can kick some into this area, but really now that it's showing us that it can break the new all-time high and that it's continue to stay up in this area, it probably does drift and disregard the green make. These are just like where it could go in the month's time. And that's where I think for us, a bigger thing that we have to work on is after that initial breakout and it comes back in, if it tops out, is keeping that closer eye on it, because these are often the times where those re-entries are much more defined. And then it just, once it can clear that prior high, it's often going to drift much higher. But also, again, this does look very good along with that EXL.
Yeah. I love those retests. I think they're great. I mean, it's a nice little consolidation. It is gapping up this morning, so just be careful of any. I personally have not been very successful trying to buy right off the open. So just kind of keep that in mind. Also, just watch for fake outs. Next one he's got is MCHP through MCCHP, Microchip Tech, through 64. So he's looking short on this one, which is pretty solid. I mean, this is a really big support level, and it's tested it multiple times. The more times it tests, the weaker it gets. So, and you know, trading under all the moving averages now, I could definitely see this one failing through that 64 area.
Yeah, especially as you see, like, gotta get better with these little arrows. It's like this is the pivot high. This is trading very similar with like the market at this time, like with that into this buy where it retested its prior high. But now we see lower highs. That was a lower high. Now it's another lower high. So the more that we keep seeing this, it's like I'm trying to like move the masses, like the pattern, like it just keeps testing support.
Yeah, you can clearly see the sellers are in control there.
Yeah. So this again down through 64, definitely can see what he's looking at.
Yeah, I like this one. The other one he's looking at is TEL 119.50.
TEL short.
TEL, yeah, also through the downside.
I mean, I again can see it. We see his lower highs. The one thing you do want to be aware of is just if we flip this chart upside down,
it's extended.
It's flipped. Like if we were to again flip it the other way, bull flag, bull flag, bull flag. This is the third bull flag now. This now the proper chart, bear flag breakdown. We have the second bear flag breakdown. We have the third bear flag breakdown. And now this is now the fourth. Now it's still without a doubt can still break this 120, but it's now starting to kind of base here. And this is where if you weren't looking to short at 150, you weren't looking to short 130, you weren't looking to short 125. Now you want to short 120. This is often the time where it's like just like us missing the first, second, third, and fourth flag, and there's that fifth flag. Range, looks super tight. And it doesn't have any more follow through, maybe that 1 or 2 days follow through, and that's the end of the high of the move. This seems like the same thing here, where maybe it gets another push under this 120, but you're starting to see this breakdown starting to base.
And you can tell like each breakdown is getting smaller and smaller.
Yeah.
Like every time it fails those bear flags, the drop down is getting shorter. So your risk to reward here isn't as big as it was a little bit higher over at like 150. Still could work again. It all depends on your time frame. If you're there for a quick 2-to-1 trade on the day or 2-3 days, it makes sense. But yeah, overall, you can't expect this one to drop out of nowhere another 20 points, in 2-3 days like it did at 150. And then the last one he's got is VR through 41.5. VR, yeah, not metaverse ETF. That's is it that one? Maybe it was a typo. It must be a typo because I don't see it here.
Definitely not metaverse. This is like the wildest chart ever.
Yeah. I'm not sure what that one was. Sorry, Chris. But yeah, that's everything for member setups.
All right.
Yeah.
And you guys here, do you guys have any names you guys want to go over before we end this?
Yeah. Anyone in the chat got something they want to look at? Give a few minutes.
Yes. Well, you guys have a good day in the chat. Any questions, please post them. And then me and Heaven will be back here at noon.
Yeah.
For the Q&A.
We got a couple questions this week. So.
And if you guys like this video and we do post it, you could drop a thumbs up. We greatly appreciate it. And we will see you guys next week.
Yeah.
And
See ya.
All right, guys. You guys have a good day.